In other news now, the central bank today kept the key lending rate unchanged at 6.5% for the third time in a row, but said inflation rates are likely to rise, led by vegetable prices. RBI Governor Shaktikanta said Monetary Policy Committee has unanimously decided to keep the policy repo rate unchanged. This means the loan interest rates too are likely to remain unchanged.
The Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5%. Our economy has continued to grow at a reasonable pace, becoming the fifth largest economy in the world and contributing around 15% to global growth. While the vegetable price shock may reverse quickly, possible El Nino weather conditions along with global food prices need to be watched closely against the backdrop of a skewed southwest monsoon so far. These developments warrant a heightened vigil on the evolving inflation trajectory. The cumulative rate hike of 250 basis points undertaken by the MPC so far is working its way into the economy. Nevertheless, domestic economic activity is holding up well and is likely to retain its momentum despite weak external demand.
This was monetary policy as expected, but with a slight twist. Now, as far as the announcement from the Reserve Bank of India governor goes, the MPC, 6 members of the MPC have voted in favor of holding the repo rate at 6.5%. 5 out of the 6 members have voted in favor of maintaining the stance as withdrawal of accommodation. Typically, Professor Jayant Varma, who's the 6th member of this Monetary Policy Committee, votes against this stance because he doesn't believe that that conveys properly what the RBI or MPC intend to do in the future. Now, apart from these expected announcements, the slight unexpected news that came out of today's monetary policy announcement was that the RBI has revised the inflation forecast for this financial year. Remember that in June, the inflation forecast was brought down from 5.2% to 5.1% for this year. Now that has been raised again to 5.4% in the current meeting. What the expectation is that the food prices, especially vegetable prices, will push up the headline inflation numbers. Core inflation, which excludes the price increases in fuel and food items, that has been coming down. However, the headline number, that has been going up consistently, 4.81% as of June, and the expectation is that going for the July print that will come in the next week, that is expected to be significantly higher. That's what the RBI governor said. The RBI also estimates that in the next few months, these vegetable prices are likely to come down. Food prices will start trending lower, and that will control the headline inflation number, but it will still remain above the RBI's target of 4% that it maintains. Apart from the inflation-linked announcements, the RBI has also introduced an incremental cash reserve ratio instrument to control the excess liquidity in the system. Now, remember that cash reserve ratio is a facility that where the RBI puts additional deposits from the banking system aside without paying any interest on those deposits. This has been introduced because other liquidity control measures have seen lukewarm responses from the banking system, and the RBI believes that this measure is essential to take out that excess liquidity, at least for the short period of time. So this starts in the fortnight starting August 12th. The RBI will review the incremental CRR as of September 8th, whether it is doing what is expected from it or whether it needs to be extended. So that decision will come in either on September 8th or before that, depending on how the situation evolves. Remember that typically during the festive season, which happens in the later part of this year, their banks need that additional liquidity because lending activity tends to pick up. Apart from these announcements, one important thing that the RBI also announced was the introduction of a new framework where a transparent mechanism will be introduced wherever interest rate resets are concerned on floating rate loans. That will be keenly watched for by the reporters out there, but that's what came out of today's RBI policy announcement.